Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video we're going to be doing a full supply and demand guide. I'm going to be teaching you everything there is to supply and demand and how to pick the right zones. And this is going to be explained through a breakdown on NZD USD, as you can see on screen, which was sent as a setup to my squad and mentorship. And speaking of that, if you want to join a community of traders, which includes a full Smart Money Concepts course, a strategy guide, a weekly Zoom calls, and loads more benefits that can all be seen here for a one-time fee of £120, make sure to check out the first link in the description and join the squad. But without further ado, let's get right into today's video. Alright everyone, so to get right into today's video, we're going to be staying on this slide alone, and we're just going to be talking about what exactly makes a supply or demand zone valid, because that's essentially the most important thing, right? What is making a supply or demand zone valid? Because I'm sure all of you by now know what a supply or demand zone is. It's now trying to single out the best ones that you can find, because you can probably find loads of them on a day-to-day basis. But this video is going to be the guide which helps you single it down to just one zone that you're going to be taking your entries from, or your confirmations from, or whatever it is. So the first thing that I'm sure most of you know by now is simply finding a break of structure. This rule about break of structure is the most basic rule when it comes to finding the right supply or demand zone. And all I mean by that is, let's say you have your supply zone over here. Your supply zone has to have broken a structural low. So as you can see here, price pushes below this structural low. Maybe this is like a 1 hour low or like a 30-minute low. So we have this 30-minute low, and price pushes below this 30-minute low, indicating that we have bearish market structure. Therefore, our supply zone is validated by this first key rule, right? So we have like a 1, 2, 3, 4, 5, essentially a 5 essentials, like key rules that we need to follow for a supply zone or demand zone to be 100% valid, right? So the first thing, like I said, is break of structure. The second thing is high volume. And what do I mean by that? What I mean by high volume is that essentially where the supply zone is, the following couple of candles after it, or at least the candle directly after it, has to be a high volume candle. So it has to be a sort of candle which shows large volume, right? So maybe a fair value gap or an imbalance candle, right? And it can't be a candle which is very like wicky, right? So it can't be a candle that's just like this, where there's no body at all and there's just wicks, right? Let me quickly switch to the pen. So it can't be a candle that just looks like this, right? And it's almost wicking back into the zone. And then the next candle again after it is looking like that, right? It can't be that kind of, what's it called, candles. Instead, it should be, so this is the zone. The candles right afterwards have to be strong, you could almost say engulfing candles, right? Or imbalanced candles, right? Just like this. Okay, so that is the second rule that you need to follow when it comes to valid supply and demand zones. Again, both of these two should already be quite obvious. The third thing is, which is another obvious one, is the supply zone or demand zone can't be mitigated, right? Price can't have already tapped into this zone. So for example, if we take this here, if we take this sort of high over here, if this high had already spiked into the zone just like this, and we already had a tap or a touch into the zone, I am no longer going to be looking to trade this particular zone. Why? Because it's already been tapped into. So if I just get the pen tool again and I show you guys, for example, if this candle over here had a wick going into the zone, this would be an invalid level of supply. Why? Because there's already a wick. A wick is a indication of mitigation, and we want zones which aren't mitigated at all. So yeah, that's clear now. So that's 1, that's 2, that's 3. Now, these 2 steps are the new steps. These 3 steps are the steps that I've always been using when I've been trading supply and demand. These 2 steps are the rules that I have implemented in the last, I'd say, 4 to 5 months, right? And that is, firstly, or fourthly in the list, a liquidity sweep. And what I mean by that is, where our supply zone is, if we look to the left of it, is there an area where price swept liquidity? So as you guys can see right here, price swept these relative equal highs when it created the supply zone move. So therefore, our supply zone has created a liquidity sweep, right? And that is really obvious. And what will make it more obvious when we go into the charts is that the actual candle which swept the liquidity, right, which is this move over here, it's usually a high volume candle, right? And that is a good indication because it means that volume increased after price grabbed this area of liquidity, right? And that is another essential that I need to see when I am trading my supply and demand zones, right? Which is a liquidity sweep, just like so, to the left of the zone. Okay, and that's that. Now we move on to the fifth rule, which is inducement, right? And all inducement is a level, a key level, whether it's a supply zone, whether it's a resistance zone, whether it's a flip zone, whether it's a breaker block, fair value, wherever it is, or just a wick or a high. We need a level below our supply zone that is going to induce early sellers, which is going to allow price to induce early sellers, which means that early sellers in this market are going to be selling from this level. We are going to be selling from this level, right? So what is going to happen is price is going to induce all of the early sellers. So people are going to be selling early at this level, and then what's going to happen is smart money is going to grab all of this liquidity, and we're going to see the actual push up into the real zone, which is this zone up here, and then we're going to sell off from here. Now, this fifth option of spotting inducement, I'd say it is quite essential, but if you see the other four, then you can go ahead with the zone, right? Inducement is something that I want to see, but I don't need to see it, right? But I must always see a liquidity sweep. But yeah, like I said, I want to definitely see inducement, but it's not a 100% must-have. But yeah, guys, those are my 5 key rules to trading supply and demand going forward. I do have other rules that I apply and other confluences that I apply when trading supply and demand, but I keep that exclusive to the mentorship because those are almost like golden confirmations. We're talking about like incorporating the fib, incorporating extreme levels, incorporating overlaps with imbalance and fair value gap and breaker blocks and things like that. I keep that exclusive. But yeah, what we're going to do now is we're going to go through all of these rules and an example in NZD USD, a trade which I actually talked about in my weekly Zoom call. So if you want to get in on these weekly Zoom calls and gain access to the setups and breakdowns that I give, make sure to click the first link in the description and gain access to the mentorship. But yeah, guys, let's go on to the real life chart example now. Alright everyone, here I am on NZD USD. We're going to be starting this breakdown on the 30-minute time frame, as that is where I did the most of my analysis. So yeah, let's get started. So the first thing that I had noticed on NZD USD is that we were starting to consolidate, right? We were clearly bearish on the 30-minute, but we had started to consolidate. So my direction wasn't very clear. I wasn't sure whether I was looking for buys or whether I was looking for sells, right? But then I noticed that we had this area of liquidity being swept, right? And I know we have this wick here and this could be considered a liquidity sweep, but if we just take this as a sort of area of relative equal highs, right, just like here, then we have a move which caused a liquidity sweep, right? And that is this move right here. You can see this candle right here, this big blue candle is the move which caused this liquidity sweep, right? And even if you don't want to count this wick over here, this high in itself is also a liquidity sweep, right? Price took out this 30-minute high, and yeah, it caused this massive push towards the upside, right? And so after a liquidity sweep, I expect some sort of reversal towards the downside, and that is exactly what we got, right? And following this reversal towards the downside, what did we see on the 15-minute was that we actually broke through this level of demand, giving us a sort of market structure shift, and we actually violated this level of demand as well, right? So this as well was a break of structure, right? So if we are going to use the rules, right, and I'm going to quickly put up the first one here, which is break of structure, we have found a valid market structure shift, which is a type of break of structure, and we have an actual break of structure here, and we have a demand zone being invalidated, right? This is going to come in important later on. So our first requirement is met of a valid demand supply zone. we have a break of structure. Now, the actual zone that I used was this 15-minute zone here at the top. If you are wondering, why didn't I use the zone just below it? If we can refine this, why didn't I use this zone over here? Why? Because if there is a zone that it's more towards the upside, that is more extreme, I'm going to select that zone, because this zone is later going to become a level of inducement, right? So for now, I'm going to select this zone. And what I actually did was I went onto the 30-minute and I made it this just last candle here, just so that it's more clean and I can increase my chances of getting entered onto this zone. Anyways, that is the zone that I selected. Let's run through the rules now. So like I said, the first rule is being followed in terms of break of structure. Second rule of high volume is also being followed. Why? If we look at the candle directly after, so the candle opened just here and it closed just here. This is a clear engulfing sort of imbalanced high volume candle. Why? Because look, it's clearly a larger candle with more volume in comparison to the candles around it, right? This is sort of the normal candle. These as well, these are the normal candles. You can clearly see here, this candle has minimum wick and it has a large body, right? Which is quickly filled out. So again, the second rule is followed. Third rule is no mitigation, right? And what do we have here? We have no mitigation. Price comes close with a wick, but no wicks back into the zone after it was created, right? And so again, that's step 3 followed. The fourth thing that I'm going to be looking at is a liquidity sweep. And as I mentioned at the start of this video, at the start of this breakdown, yes, we do have a liquidity sweep. So let me go to the 10-minute time frame. This right here is our liquidity sweep. Price swept out this high and it swept out these relative equal highs on the higher time frame, right? So we definitely also have a liquidity sweep. Go back to 30. And our last step is inducement, right? And what do we have here? Like I mentioned, we have this 20-minute level of inducement, right? Right here, where's IND? So guys, we have all of the steps being followed here on NZD USD. We have a break of structure here, high volume there, no mitigation there, liquidity sweep here, and inducement here, right? We have a valid level of supply, completely following all of my rules. Now, this allows me to take shorts from this area over here. I didn't need to find confirmations, right? I actually mentioned I was going to look for confirmations because I want to stay on the safe side. However, this would be a valid sort of trade to go off just by this alone. I wanted to be more safe and look for confirmations, but looking back at it, of course, I'm not going to be 100% right in my judgment, but this is a setup that you could have 100% went aggressive on because all 5 rules were being followed, right? So yeah, guys, let's see how it went. Just play this market out. Take profits are going at this opposing level of demand because, like I said, I wasn't clear about the direction, so we could have either been bullish or bearish, so I have to be cautious in case price respect this level of demand. Oh yeah, another thing I forgot to mention is this is actually a flip zone. Why is this a flip zone? Because price failed demand and so supply takes over and this becomes a flip zone, which makes it even more valid, right? So those are one of the extra confirmations that I use. But yeah, let's actually go ahead and get triggered in instantly into profit, and eventually we do hit full take profit, right? Now, key takeaways from this are: you must be incorporating these last 2 steps in your day-to-day trading now. And I always mention these 2 things on my Instagram, so make sure you also check out my Instagram for some education on there as well. But yeah, I hope you guys implement these 5 rules in your day-to-day trading. I know you will find them useful, so please do backtest them, please do check it out, and hopefully you enjoyed this video, and I will see you guys in the next one.